Hey guys, it's Nasir here again. I got hold of a options trading account for myself. And again, as I mentioned in my previous videos, a friend of mine reached out, so we thought let's just set up an account, top it up with £10,000 and trade it whilst the market is collapsing. See what happens. Being ex-traders, we've got a good chance of being successful. We've seen very similar stuff before, so I don't know. We'll see. We might end up losing the whole pot, or we might end up making a good profit. So we'll show you guys the journey as we go along. For those of you who are wondering why is this guy still wearing that same shirt, I took these three videos on the same day, within the same hour, but I just broke it down into separate chunks. I mean, I took my trading position here already, but I just want to show you, because it's really hard to talk while I'm sort of trading. I mean, I haven't done this for years, so yeah, I had to focus a little bit. So anyways, getting down to this, these are options. We can talk about options in another sort of session. You can check it out. Check out my website. There's a breakdown of how options work and things like that, if you want to learn what options trading is. But it's really good. It's really good. You can trade things, whether it's commodities or actual stocks and stuff, without having to own the stock or the commodities. So, and again, you don't have to pay down the full amount of money. So I mean, it's just a vague summary there, but it's really good. And option prices tend to be a lot more volatile, and they tend to move quite a lot, and they come with limited risk, as opposed to, for example, doing CFDs, which are contracts for differences, if you've traded them before, which are very risky. So I find options to be far less risky, although they tend to fluctuate a lot more as well. But anyways, let me show you what I've been doing. So let's have a look at the oil chart again in this platform. I'm just going to zoom out. Oops, that's an hourly basis. Let's go to 1 day. So again, oil has been falling, as we know. I spoke in my last video where it just dropped to around 30, and since then it's been dropping further to 20, and here we are. Oil is sitting at around 20. As you can see, the movements have become really shallow now. So what's been happening is the market seems to be waiting for something. And when I see stuff like this, and when I'm looking for an entry position, when I want to go in on a certain instrument, in this case oil, I usually look at the hourly chart just to get my timing as good as possible. And I can see something's going on, so I'm going to zoom in. Wait, just before I zoom in, let me just see if there's anything I'm missing here that I should mention. Nah, I've talked about this stuff before. I'm going to zoom in on an hourly chart. Alright, you can see the time frame here. So yeah, okay, and I see something interesting. Remember how on my other video, where's my other chart? Where's my other chart actually? Let's pop that one back up. Remember on my other video I talked about how there was a descending triangle chart pattern in the long term with crude oil. Now I'm seeing a similar thing here now, actually, again in a much smaller scale, which is on an hourly basis. You see that? You see that triangle pattern? So usually what I do is I take a copy of that chart and I put it into a PowerPoint or something, and I start drawing some lines which are support and resistance lines. I'm going to reduce that. In fact, let me just hide this away so I can just walk you through this. So oil was obviously on a downtrend, and this is on an hourly basis, so this is for precise timing. Okay, it wasn't downtrend, and now that trend is broken. So the question is, when a trend usually breaks, it usually means a reversal. So the prices tend to go in the other direction. Not necessarily, but it tends to. It could easily, if oil could just easily continue falling above this trend line. But I can also see the price seems to sort of just stop around here, and there's a reason for that. There's some market psychology going on here. Investors don't think that oil should be worth anything less than the $20 is at the moment, and most likely they're waiting for some kind of direction, whether that might be a governmental direction, whether that might be something to do with OPEC, Saudi, Russia, those kind of things. So definitely the market's waiting for something, hence the price is moving sideways and not in a certain direction. So it's sort of stabilized around 20. You're probably thinking, hold on a minute, it doesn't say 20 there, Nasir. It doesn't say 20 there. These are the option prices. The actual underlying asset, which is oil, is around $20. Let's have a quick look. Yeah, there it is, around $20. So on this chart you can see it's 20. So it's the same looking chart, it's just the pricing is different because I'm using options. And as I mentioned to you before, options tend to be a lot cheaper, so you can buy a lot more for the same amount of money that you have, therefore making a lot more profit or making a lot more loss. So do be careful. But the good thing with options is that the amount that you buy, that's the most that you can lose. Whereas with things like CFDs or other derivatives, you might buy this much, but you can lose a lot more than that if you don't protect yourself when the market goes against you. So looking at this, I can see there's some support here, so this is really tempting me to sort of go into oil already. The volatility has gone down, so my option prices should be quite good, and I can see that the price movement range is narrowing significantly, so it looks like there's going to be something happening in the markets today or tomorrow. I mean, today we've already had the oil inventories come out, so there's a lot of extra inventory in the market, which suggests the market could fall. But there's also a statement we're waiting for from the US president, where he's sort of mentioned that he might step in and have some discussions with Saudi and Russia about their issues in order to try and stabilize oil prices, which means if that goes positive, which means the oil price could start rallying and going up. So all in all, to me, based on the bigger picture and zooming in into this really close up, I'm pretty confident oil is going to go up. It could end up going down after the statement, but again, I think that would be a temporary move. Oil could easily dip to around $18, maybe worst case $15, in which case I'd probably buy a bit more. So what I've done, guys, is I've done it already. I've gone in. My account's got 5,000 at the moment. We're still waiting for another 5,000 to come into this account. I've already gone in. If I go to my open positions, I've already gone in and bought some oil calls with a strike of 21.5. How many did I buy? It was 1,000 barrels, I think it was. Yeah, so it was 500 barrels it was. It doesn't really show here. If I click that, does it show me how much I bought? There you go. I bought 500 options, so that was 5 contracts. Each contract, it has 100 options. So I bought 500 options. Yeah, and it's only cost me $1,000, whereas the actual value of these options is far more. Value of the underlying asset is far more. So I bought $1,000 worth of options, but the amount of cash that I need to pay up front is $184. Yeah, and that's shown as the margin here. That's shown as the margin. That's in pounds, obviously. That's shown as the margin. So I've got the rest of the equity remaining, so I can trade a lot more. I've just taken a small position. I want to get in with 10 contracts, so I just went with half a position because I want to see what happens when there's further news in the market. I want to see, does oil really pop out upwards or does it really pop out downwards? If it goes downwards, I'm going to go in with the remaining 5 contracts that I want to buy. Yeah, so I've taken that trade, and as I'm expecting that oil could dip to around $18 or worst case $15, based on what's going to come out today or tomorrow, because the price has been narrowing in range. I've actually bought a put option with a 19 strike, just as a hedge. It might yield something, it might not yield anything, it might just expire worthless, but it's only 3 contracts here. I just want to see what happens and you know, get myself back into the flow of options trading. Do bear in mind, it's been 10 years I haven't done this, so let's see what happens. So another thing, you're probably thinking, what are these strikes and calls and puts that I'm talking about? You'll have to refer to my blog on options. There's a whole section on that, so please check it out. There's some videos on that as well. But just to show you how I decide the strike, I've got this nasty spreadsheet that I used to use back in the days. So this spreadsheet I literally opened 10 years later. And yeah, I had a headache trying to recall how I used to use this spreadsheet. I mean, this is one of many spreadsheets that we used to use. Yeah, so here's a spreadsheet. As you can see, there's a lot of fields to it, and again, I haven't fully populated it yet. Just doing some modeling with the numbers just to see what works best. So basically what I did essentially is I got, if it would load, I got all the puts and all the call options available on this platform. This is a plus 500. They don't really have all the calls and puts that are available in the market. Their range is quite low, so if you want, for example, leap options or options with lower strikes, you'll have to look at other brokers. And again, I'm just starting out again, so I just went with any broker, to be honest. So I just copied all these, did a little bit of number manipulation and plugged it into here. Let's see, let's go here where I actually chose the strike. Where is it? There. I just plugged it into here. As you can see, I've been looking at option prices at different times to see how it's actually behaving. But anyways, it was here yesterday. I took that trade actually. So yeah, I plugged in these numbers, did some crunching on my spreadsheet. Hold on, that should be at 30. Do some crunching on my spreadsheet. Usually I go for a risk-reward ratio of close to 3. Yeah, there's high risk-reward ratios where you risk £1 in order to get a £4 return, for example, but it might not work out always, so it gets more risky. With the higher risk comes higher reward, so I usually tend to stick to around close to 3. Being too greedy, I know from experience, can be a bad thing as well. So yeah, and my risk reward ratio, and again these calculations tell me what my potential profit would be, etc, etc, etc. We'll talk about this stuff in future videos. So based on that, I wanted to go for a strike of 21.5. so I needed the call with a strike of 21.5, which is a May contract as well. And the reason I'm going for a May contract is because this plus 500 doesn't give me anything other than May contracts. Ideally I want to go for a June contract, give myself a bit more time before the option expires. But hey, we're just starting out. I've only got a few small positions, 5-10 contracts at most, so let's see what happens with that. So yeah, I'll keep you posted. Let's have a quick look at the positions. As you can see, I'm already in loss by, what was the total amount there? Loss of £81. Let's see, and I'll keep you updated on my progress on this.